Good day, everyone. Welcome to another video lecture for Intermediate Accounting 3. I am your instructor, Ms. Jazome Solarinos Del Monte. So in this video, we are going to discuss all about provisions and contingent liability. So recognition of a provision. Past 37, paragraph 14 provides that a provision should be recognized as a liability in the financial statements under the following conditions. Letter A, the entity has a present obligation, whether legal or constructive, as a result of past event. Letter B, it is probable that an outflow of resources embodying economic benefits would be required to settle the obligation. And lastly, the amount of obligation can be measured reliably. So based on this recognition principle, there are three essential characteristics of a provision. We have past event, wherein the past event, often referred to as the obligating event, and must have occurred. And the obligating event in this case is the sale of product, which gives rise to the constructive obligation. Probable outflow of resources. An outflow of economic resources is regarded as probable if the event is more likely than not to occur, meaning the probability that the event will occur is greater than the probability that it will not occur. So as a rule of thumb, probable means more than 50% likely or substantially more, while possible means 50% or less likely to occur. Remote means 10% or less likely to occur or very slight of occurrence. So that is the probability rate niya. So pag may tag if ang probability of occurrence is 50% or more than 50%, that it means to say probable siya. So pag probable, we need to recognize the provision. Then reliable estimate, where no reliable estimate can be made, no liability is recognized. So provision is also a liability, also an estimated liability that need to be recognized or that need to be treated with proper accounting. So measurement of a provision. The amount recognized as a provision should be the best estimate of the expenditure required to settle the present obligation at the end of the reporting period. So take note, the keyword here, the measurement should be the best estimate. Provision is an estimate, but we need to measure it with the best estimate of the expenditure. The best estimate is the amount that an entity would rationally pay to settle the obligation at the end of the reporting period, or the transfer it to a third party at that time. Okay, so that is how we determine the best estimate, the amount that an entity would rationally pay to settle the obligation. Where a single application is being measured, the individual most likely outcome adjusted for the effect of the other possible outcomes may be the best estimate. Okay? Pag one application lang siya, mostly the best estimate is adjusted with the other effects of possible outcomes. Where there is a continuous range of possible outcomes, each point in that range is as likely as any other, the midpoint of the range is used. Like say for example, if the outcome will be ranging from 100,000 to 500,000, then the best estimate should be the midpoint range or the average. Meaning to say, 100,000 plus 500,000, that is 600,000 divided by 2, the midpoint is 300,000. Where the provision being measured involves a large population of items, the obligation is estimated by weighting all possible outcomes by their associated possibilities. So associated possibilities will be in the form of percentage or probability niya, like say for example 20%, 30%, 50%. And kailangan ang probabilities, the total probabilities of all the outcomes should, of course, equal to 100%. So the name of this statistical method of estimation is the expected value. That is when there is, or it involves, a large population of items. So illustration for the expected value method: an entity sells goods with a warranty under which customers are covered for the cost of repairs of any manufacturing defects that become apparent within 6 months after purchase. So if the minor defects are detected in all the products sold, repair cost would be about 1 million pesos. If major defects are detected in all products sold, repair cost of 5 million would result. So there are two classifications of defects here: minor and major defects. And each type of defect will have a corresponding repair cost. The entity's past experience and future expectation indicates that 75% of goods sold will have no defects, while 20% of it will have minor defects and 5% for major defects. So that is the probability. Okay? So to get the expected value of the provision, so let's have the sales that has no defect, that is 75%. So zero siya. Since no defect siya, then there is no corresponding repair cost. That is why none siya. That is for the 75% of sales. Next is 20% of the sales will have a corresponding repair cost. So 20% of 1 million. Okay? So 1 million, 20% niya is 200,000. For the major defects, which consists of 5% of the sales, 5% times 5 million nga repair cost for the major defects. So we have 250,000. Therefore, just get the total of it. Okay, therefore, the expected value or the cost of repair to be recognized as provision is 450,000. Another illustration: an entity is a defendant in a patent infringement suit. Lawyers believe that there is a 60% chance that the court will not dismiss the case and entity will incur an outflow of future economic benefits. Take note that 60% of chance, okay, meaning it is probable that the defendant, the entity as the defendant, will lose the case. Okay, so pag ano siya, unfavorable siya on the part of the entity as the defendant, that there could be a possible or probable loss. Since 60% chance siya, which is within the probable rate nato, so we need to recognize the provision. If the court rules against the entity and in favor of the claimant, the lawyers believe that there is a 30% chance the entity will be required to pay damages of 4 million and a 70% chance that the damage will be 2 million. A 10% risk adjustment factor to the probabilities of the expected cash flow is considered appropriate to reflect the uncertainties in the cash flow estimate. So how to get the provision? So how much will be the expected cash outflow, expected value niya? So since there are two possible outcome, 30%, the first outcome, if mapildi siya, will be 30% ang chance nga makabayad siya og 4 million, while 70% ang chance nga makabayad siya og 2 million. So that would be 30% times 4 million, okay, the amount to be paid and the probability, times the chance nga mapildi siya, or chance that the entity will lose the case. So 60%, that is 720,000. Well, the other outcome, 70% that 2 million ang iyahang mabayaran. So, 70% times 2 million times 60% chance nga mapildi siya or chance to lose the case, we have 840,000 for a total of 1,560,000. That is the expected cash flow. So, the expected cash outflow is 1,560,000. Now, since there has been estimated or there has been an estimation on the risk associated with this expected cash outflow niya, and the risk adjustment is 10%. So, what will happen? So, we need to adjust this cash outflow to make it or to adhere it with the risk adjustment factor, and that is 10%. So, meaning, madungagan siya. Kani imong expected cash outflow, madungagan pa niya siya tungod sa associated risk niya, and the additional will be 10%. So, 10% of 1,560, that is 156,000. So, therefore, the total estimated amount of provision to be recognized is 1,716,000. Now, since this is a provision and this is a liability, this amount should be or shall be discounted if the effect of the time value of money is material. Now, as we've mentioned, we need to measure the provision at its best estimate, right? But there are other measurement consideration aside sa best estimate niya. So, depende sa area. Okay? We have risk and uncertainties, like what we have shown on the previous slide. Nga naa siya risk adjustment factor. A risk adjustment may increase the amount at which a liability is measured. As prudence dictates, ocean is needed in making judgment under, or caution. Okay, caution is needed in making judgment under conditions of uncertainty so that the income and assets are not overstated and expenses and liabilities are not understated. So, moto siya to ang example kaganiha that when there is risk and uncertainties which affects our provision, then kailangan nato siya i-adjust using a risk adjustment factor. Present value of obligation, where the effect of the time value of money is material, then the amount of the provision shall be the present value of the expenditure expected to set through the obligation. Therefore, the provision should be discounted. Next, future events. Future events that affect the amount required to settle an obligation shall be reflected in the amount of a provision where there is a sufficient evidence that they will occur. Okay, so future events. So, sa may mga kasagaran future events, if there is a subsequent event other than the settlement, then whatever the cost on that future event shall also be reflected in your provision. Expected disposal of assets. Any gains from expected disposal of assets shall not be taken into account in measuring a provision. Instead, the entity shall recognize gain on disposal at the time of disposition of the asset. Example, in effect of the provision that you are recognizing, there is an associated asset nga kailangan nimo i-dispose for you to be able to settle the said provision. Now, whatever the gain or a gain on disposal of that related asset should not be reflected in the amount or in the measurement of your provision. Thus, it shall be reported separately in the profit or loss, the said gain on disposal. Reimbursement, where some or all of the expenditure required to settle a provision is expected to be reimbursed by another party, The reimbursement shall be recognized when it is virtually certain that reimbursement would be received if the entity settles the obligation. So meaning pag naay third party nga mo supposed to be dapat mo shoulder sa imuhang gibayad in settling the provision, then the reimbursement shall be considered whenever it is virtually certain that there is a reimbursement in the future. Ang nahitabo, class, ikaw lang ang nag-recognize sa provision but you are not really the direct payee or obligor of the said provision. Kumbaga, ikaw lang ang nag-represent in behalf of the other party. So, meaning, there is a possible reimbursement. So, i-reimburse ka sa katong third party sa tanang nabayad nimo sa katong provision. Now, that reimbursement will be taken into account provided that it is virtually certain. Now, the reimbursement shall be treated as a separate asset and not netted against the estimated liability. So, kailangan i-separate nimo siya as a receivable. Okay? Katong amount nga ma-reimburse sa imuha and should not be netted against the provision. The amount of reimbursement shall not exceed the amount of the provision. So, ano lang siya? Counterbalance lang siya sa amount sa imuhang provision. Change in provision. Provision shall be reviewed at every end of the reporting period and adjusted to reflect the current best estimate. The provision shall be reversed if it is no longer probable that an outflow of economic benefits would be required to set the obligation. So, we need to say every end of the period, so you need to evaluate whether the estimates of your provision is still accurate. So, if not, then you need to change the provision. Imo lang siyang i-adjust para mag-reflect siya into its current best estimate. But in such a case that in the future, there is no more probability that an outflow of economic benefits will be made in the future, then we need to reverse our provision. Same thing if the best estimate of the provision in the current year has decreased, then of course, i-reverse nimo ang imuhang provision. Pagamyan po nimo imuhang provision. Use of provision. A provision shall only be used for expenditures for which the provision was originally recognized. If an expenditure is charged against a provision that was originally recognized for another purpose, that would camouflage the impact of two different events, starting financial performance and possibly constituting financial reporting fraud. Okay, so ang buot lang pasabot ani if such provision has a specific purpose, okay, or a specific use, it should not be used with another set of provision. Future operating losses. Provision shall not be recognized for future operating losses. In other words, a provision for operating losses is not recognized because a past event creating a present obligation has not occurred. Okay? Meaning to say, if you foreseen a future operating losses, dili nimo siya gamiton as a requirement, okay, as the basis of your provision. So there's no provision to be recognized in relation to a future operating losses. Kay dili man nimo liability, okay? Dili man liability ang magkaroon ng operating losses in the future. Then, onerous contract. If an entity has an onerous contract, the present obligation under the contract shall be recognized and measured as a provision. So what is an onerous contract? It is a contract in which the unavoidable cost of meeting the obligation under the contract exceeds the economic benefits expected to be received under it. Meaning to say, kung sa atua pa, if asset pa siya, that means to say the benefits exceeds the cost. But for a provision, particularly an onerous contract, the cost here exceeds the benefit. So whatever the excess of the cost over the benefit should be included in the provision and should be discounted. Okay? Now, examples of provision. Okay, so first we have the warranties. So we already discussed that one in our previous video lecture. Environmental contamination. The obligating event is the contamination of the property which gives rise to constructive or legal obligation. A provision is recognized for the best estimate of the cost of cleaning up the contamination. So, kung ano man environmental contamination. Decommissioning or abandonment cost. So, what is decommissioning class? When you say decommissioning, this is your kumbaga, obligation to restore or to put its to put it into its original condition or to transform it at the end of its life into its original condition. So that is decommissioning or the what we call restoration. The cost of abandonment or decommissioning shall be recognized as a provision and may be capitalized as the cost of the oil field. Court case. When the entity prepares the financial statements for the current year, the lawyers advise that over into the development in the case, it is probable that the entity would be found liable. So meaning there's a probable chance or greater chance that you will lose the case. So in that case, a provision is recognized for the best estimate all the damages because there is a present obligation. Then last but not the least, guarantee. A provision is recognized for the best estimate of the guarantee obligation because there is legal obligation arising from the obligating event, which is the guarantee. So, meaning to say, the entity presents himself as the guarantor. Okay, nahimo siyang guarantor class sa isa ka liability sa isa ka party, sa other party. So, with that, as a guarantor class, you need to recognize a certain amount for a provision. Okay, you are already considered liable with that particular debt of the other party. Next is restructuring. So what is restructuring? PAS 37 paragraph 10 defines restructuring as a program that is planned and controlled by management and materially changes either the scope of a business or of an entity or the manner in which that business is conducted. So there is a material change in the scope of business or the manner in which the business is conducted. So events that qualify as restructuring include sale or termination of a line of business, closure of business location in a region or relocation of business activities from one location to another or relocation of headquarters from one country to another, change in management structure such as elimination of a layer of management or making all functional units autonomous, fundamental reorganization of an entity that has a material and significant impact on its operations. Contingent liability. So, PAS 37 paragraph 10 defines a contingent liability in two ways. Contingent liability is a possible obligation that arises from past event and whose existence will be confirmed by only the occurrence or non-occurrence of one or more uncertainties or uncertain future events not wholly within the control of the entity. A contingent liability also is a present obligation that arises from past event but is not recognized because it is not probable that an outflow of resources embodying economic benefits will be required to settle the obligation, or the amount of obligation cannot be measured reliably. So how does it differ from the provision? Contingent liability and provisions are the same because they are both liability. There is an outflow of economic resources, but what differs them is the chance of occurrence. When you say chance of occurrence, when I say provision, it is probable that there is an outflow of economic resources. But for contingent liability, there's only possibility. So, di ba, lahi-lahi man taog, kanang level or degree of occurrence ang possible and probable. Pag probable, the chance of occurrence is ranging from 50% and up, while ang possible less than 50%. So mag-differ yun siya sa chance of occurrence. And with that, there is also a different accounting treatment. For a provision, it should be recognized. Okay? Pag probable siya, it need to be recognized. But for a provision, for a contingent liability, there's no need for a recognition. Instead, only disclosure shall be made. Okay, so mo ni siya akong na-mention kaganihan, no? Ang contingent liability, possible. Ang provision, probable. So the second definition states that the contingent liability is a present obligation. However, the present obligation is either probable or measurable, but not both to be considered as a contingent liability. If the present obligation is probable and the amount can be measured reliably, the obligation is not a contingent liability but shall be recognized as a provision. So, ang isa ka kuan nato class, ang duha ka requirement nato for a liability to be recognized is dapat both probable and measurable. So, pag both siya, then that should be recognized as a provision. Pero kung either lang, though probable siya pero dili siya measurable, then dili gapon siya ma-considered as provision. Or measurable siya pero dili siya probable, dili gapon siya ma-considered as provision. And that is a contingent liability. Treatment of a contingent liability, as I've mentioned, contingent liability should not be or shall not be recognized in the financial statements but shall be disclosed only. So, disclosure lang ang kailangan. So, what are the disclosures required? First, a brief description of the nature of the contingent liability, an estimate of its financial assets, an indication of the uncertainties that exist, possibility of any reimbursement, and if a contingent liability is remote, no disclosure is necessary. Okay, so another degree of, aside sa probable and possible, is the remote. So, pag remote gani, less than 10% ang chance of occurrence. Now, if such case is considered as remote, then neither recognition and disclosure is required. Now, if we have contingent liability, there's also contingent asset. So, meaning, pag naay contingent liability, that is a possible liability. Therefore, ang contingent asset is also a possible asset. So, what is the treatment of the contingent asset? Contingent asset is a possible asset that arises from past event and whose existence will be confirmed only by the occurrence or non-occurrence of one or more uncertain future events not wholly within the control of the entity. So, possible asset lang siya. A contingent asset shall not be recognized because this may result in recognition of income that may never be realized. So, tag-ani ka ng, sige to siya nga principle ha, prudence or conservatism nga principle. In that principle, it says there that possible income or income that has no certainty to be realized in the future should not be recognized as income or asset. Mo na isa na siya ang contingent liability. Contingent liability is a possible asset and therefore should not be recognized because this may result in a recognition of income that may never be realized. However, when the realization of income is virtually certain, the related asset is no longer contingent asset and its recognition is appropriate. So pag virtually certain, take note class ha, ang degree niya is virtually certain nga ma-realize ang katong contingent asset, then that asset will no longer be a contingent asset but rather asset na gid siya. Okay? And should be recognized appropriately. So treatment of contingent asset, it is only required to be disclosed when it is probable. Okay? So, pag probable ang chance of occurrence sa contingent liability, then it is required to be disclosed. But for contingent asset that is possible only or remote, then there is no disclosure required. Okay? So, amount of or information that need to be disclosed for a contingent asset that is probable. It includes a brief description of the contingent asset and an estimate of its financial effects. Again, pag contingent asset is possible or remote, then there is no disclosure required. Okay? So that ends our lecture for this video. So I hope that you have learned a lot from this video, and if in case that you need further understanding with the lesson, you may refer to these following sources. So thank you so much for watching. We'll see you on our next online meeting and for our future videos. Thank you so much. Bye.